Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Friday, August the 1st, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're going to look at the daily chart for a quick second, and of course, you guys know I use TrendSpider for all my charting, as I have for many, many years. And now we are implementing a little bit of its machine learning qualities to help you with that. And so here we go. Yesterday, we had a very big high volume breakdown. And the pre-market action has been a confirmation of the high volume breakdown event. And now we're here right at the point of control for the visible range, okay? And so this is what we are staring down. This area right here at around 62.90 or so is going to be a bit of a fight club. You see how many days we sat in this range? So my suspicion is if we lose this edge, we head back to the base of this range. We have secondary support here from the AI strategy event. And that is going to give us 62.43. I'm going to put long action right there and wait for it. Now, it could be that we hang out over the point of control and we end up jumping back above this opening range of 6326.50. That is, of course, initial balance range. But I also did some data analysis on Edgeful, which I love, as you guys know, big fan of Edgeful. And here's what it told me. It told me that instead of a 1 hour opening range, I should consider a 30-minute opening range. And so we are going to look at that very carefully. So here's what happened. We came right down into that 32.95 area. This is our first bounce. This is a heavy congestion zone, right? So we could have a little bit of trouble between 6,308 and 6,326. Of course, we are discussing the E-mini S&P. Good heavens, forgot to tell Otter that. So here's what our opening range formation looks like. High, 6,373, low, 6,359. Now, let's look at the time framing event of what's going on. So we've had, let's just look at the past week, right? This is Monday, I think. Monday, Tuesday, Wednesday, Thursday, Friday. Yes, this is Monday. Here's our 30-minute opening range. We time framed down into Tuesday and down into Wednesday, bounced up but could not stay above the high of the opening range for Monday. Pretty important, okay? So we're going to leave that right there at 64.55, looking at this, but now we are time framing lower again with a pretty important line in the sand. And if we don't hold this area, here's our 6,243. What's my thought? Bounces are going to be sell zones right now, right? We have a very big break of volume. This is institutional selling down in here. And so with the pre-market action, if the jobs numbers come in and they are going to cause price action to bounce, I think we bounce into resistance. Okay, so if we get up over 6,340, we are going to head into the opening range low, right? And that is going to be our 30-minute opening range. I know this must annoy the absolute madness out of you, but the goal is always push on what you assume to be true and let data prove it out. And what the data proved out to me in the Edgeful stats that I ran this morning is that the opening range for 30 minutes gives me a great deal of information that I can use. It also tells me that there are lots of mean reversions that occur around these opening ranges. So we got to watch for that to see if the buyers come in. I don't know if they will, but I will tell you, because of the machine learning event, I am long from 6,302, and I intend to stay long until 6,326 with a stop at 6,290. I have enough, my size is small enough that I'm not going to worry about that if it dips. All right, and we have momentum flattening that suggests we have a potential exhaustion pattern that should give us some kind of reversal. Okay, so there we have it. Pretty interesting stuff. Let's go to the NQ. All right, so here's what's going on with the NQ. Opening range, high 23,347, low, high 23,347, low 23,296. What did we do? We got to the top of the 30-minute formation. It gives us a sell zone, as we know, especially if we break the bottom. If you break the bottom and take the short, the width of the opening range and then some is your minimum stop. So I would always wait for a failed retest. We have this bright yellow tells us that we've got increased volume relative to normal behavior. And what are the traders trying to do? We've just tested the average daily range event, and now we're bouncing. All the traders want to get up over this Friday's IV number, right? They really, really do. For the ES, what's that IV number? Holy smokes, it's all the way up here at 63.68. Yeah, which is super interesting because that's where the reversal zone is looking like. So everything is converging very, very nicely. All right, so what are we staring down? We're staring down a reflexive bounce into the jobs numbers that are going to come. I don't even know why we trade these. These jobs numbers aren't real. They are calculated, but neither here nor there. What are we staring down? Thursday's implied vol is 23,213. Opening range formation, high 23,347. And so that looks to me like resistance, but here's the thing. If we have a big volume surge, which I'll be watching, if we have a big volume surge, then the key thing would be, all right, can I get back in the opening range? And is there enough volume to push me up over the edge here? I don't know. But what I do know is the bounces should be sell zones at the first pass, but we are seeing some sort of volume exhaustion event relative to this downward flow. So we really could retrace into the closing tick of the day yesterday. Super important to remember that. 23,329.50. They still haven't fixed the gold chart, so I'm not going to work on it. Let's take a look at the YM. First, the daily, right? This one clearly looks like it's breaking. Okay, so let's see if we actually had a measured move for this inverted head and shoulders pattern. Not quite at all. So not so much. 1.5 is all the way up here, but this certainly looks like a topping formation to me, folks. It really does. Really does. Is this the first area of support that we're staring down at 43,965? The answer is yes. Look at the heavy congestion. 1, 2, 3, 4, 5, 6, 7 days in a very tight range. I would not be surprised if we eventually came back into 43,325. We are inside of the value area on the daily event. Bounces should be sell zones. Let's take a look at our 30-minute chart. What are we seeing? Same kind of a volume exhaustion. Let's take a look at our 30-minute formation. I know this is making some of you guys crazy. I'm just telling you. I did the stats, and to be true to myself and to the process of improvement, the stats clearly told me I need to be looking at the 30-minute rather than the hourly. Okay, so what are we staring down? Baseline support of 43,804. If we lose it, 43,325, probably next on the horizon. YM high 44,323, low 44,219. Pretty wide range, right? Again, same formation as the ES and the NQ, topping on the 30-minute and then a continuation down. Notice, here's the break that tells us we could go lower. But all of these motions, especially after exhaustion and so much volume, a reflexive bounce to the top of the edge. Not a bad idea to wait on it, or you take almost 100 points of risk. But a beautiful trade, nevertheless. Absolutely fantastic. And now we're sitting in a space where we are likely to try to test 43,965 into the jobs number. I have no idea which way we'll go, but we do see flattening. So I anticipate bounce that potentially fails, but that bounce could be big. Our volume profile is very thin here, and we could fill it in all the way into the opening range formation. All right, let's take a look at Bitcoin. Okay, here's what we've got. Opening range for Bitcoin. Wow, that's a lot of activity today. Pre-market activity is very, very large. Okay, so as you guys know, I was a big fan of seeing this thing come in to 115. I said, hey, listen, if it loses 118,000 and doesn't quickly recover, I'm getting out. So it did quickly recover. I got out anyway. Still a very nice trade for me. Not worried about it at all. Consolidation broke down yesterday at 118,800. Machine learning told us that the failure at that zone, particularly the POC, gives us tremendous selling. We had broad market sell-off yesterday in all the instruments. This is institutional broad selling, so it tells me that we potentially have a change of seas. And so the bounce event probably going to bring us a little bit lower. That's my thought. Okay, so what are we staring down? A bounce action event. Let's take a peek. High of the opening range, that is the first 30 minutes of trading. That's 117,245. Low, 116,640. IV for Thursday was 106,899. We closed just shy of it, making the volume, the probability for the traders that sold this put to expire, they made their money. Acceleration of movement, this potential exhaustion at the low edge into 114,807, but we're in a broad sell-off, and if we have these liquidation events, the bounces should give us sell zones we're going to look for a pullback that gives us a higher low. So far, we have a look below that failed, which suggests we're going to run up into 116,000 and then the opening range low, which is 116,640. Let's take a look at the daily while we're at that. Yeah, that is a very big pocket. We should hold it. Look, they tried to fill the gap in the overnight. That is very important because crypto trades 24 hours. That's a pretty important line. I don't know how come I've got accumulation and distribution here, but whatever, right? We are looking at potential fading of accumulation, right? So it's still saying dips or buys. That's what this is telling us, right? Dips are still buys. That's 114,000. Remember, we've had several very big money Bitcoin traders that have liquidated billions in holdings. Are they looking for a rotation? Methinks so. Next line in the sand, 113,325. I'm looking for a bounce up into 119,000, 120,000. That gives me another region to short for continuation, right? But this does look like an exhaustion bounce that is trying to work. Let's take a look at oil. Remember, try to use just one of these instruments to trade. I'm giving you a lot of data. It's very dense. And so it's probably better just to say, hey, can I understand price action motion just from one of these trades? And so have a look. Let's go to the daily here, right? Bounced up into the point of control. Again, we know this is very noisy, incredibly noisy, right? 70-50 support, 70-50 resistance. I don't think support is, I think it's $66.60. I wouldn't be surprised. Notice the size of the value area. I would not actually be surprised to see us get to the value area low. So what would be very nice today is if we had some sort of bounce that failed and allowed us to get into the thin volume pockets and then this central space below. I mean, I like a short, but on the bounce. That is my thought. And I would not be surprised to see a bounce. Opening range in oil, $69.46 on the high. Low, $69.22. Look at what we did. We tested both sides of this, right? The breakdown, failed retest gives us a lower low. Another failed retest gives us another lower low. So the selling is very serious up here. Could buyers come in here? Yes, as we come into value area low, that tends to act as support. So we're going to see a little bit of a reflexive bounce potentially into the VWAP. That's the volume weighted average price of the visible range. But my thought is if we cannot get up over $69, we will head back lower. All right, sticky. You could try either side, but I think this is a tough go here, especially since we could have ourselves a significant range break. I have no idea what's going to go on. Pre-market low, pretty important here. I'm going to put a line in the sand right there. You can see them buying at 68.43. If that fails, we're going to be looking at more downside action for sure. So be careful trying to go long at this 68.47. If it doesn't immediately catch fire, this is a candlestick we will retrace. And that is 70 cents to the south. So 7 $100 below. Be very careful. All right, as I mentioned, don't have the new gold contracts. They haven't pulled up together yet, so let's go to SPY. What are we seeing with SPY? Very big volume breakdown. These orange lines mean accelerated motion. Institutional selling here. The gap down, here's something super interesting. If we've got this very heavy volume into the close, it normally suggests that a gap down in the direction of this motion is likely. What are we trying to do? Fill the gap. We're actually trying to fill the gap. And so what do we want to see? We want to see price action get back up above this heavy congestion zone, and then move to the north. So here's the thing. Below $624.86, we've got more selling pressure. Above $628.60, we get into Friday's IV. You know they're going to try and punch it right up there. Super important they try to punch it up. So just be careful watching that. And yeah, I'm not really sure I'm going to trade much today. Maybe just take a couple of trades. This is accumulation into the next range of accumulation. This is a look above that fails. Now, this is a very interesting candlestick. This is a very bearish candlestick formation right here. Yeah, so this continuation suggests as the gap fills, traders are going to be forced into lower areas of support. This is about the halfway zone of the prior congestion. Looks like about 63.40. As the crow flies, 623.20 is actually that midline. If it comes into there and loses it, if it bounces, we've got ourselves a good bounce formation. But again, this candlestick is very important. Okay, this is a very, very important candlestick. All right, that's it for me, folks. Look alert. You don't have to trade every day. Employment numbers coming out today, and they could throw us in all kinds of crazy directions. I do believe we're in a reflexive bounce. I'm about, 8 points from my target to cover my long ES. And so we'll just wait it out. All right, everyone. I'll see you on the streams.